this week, a lot of people got worried about the insurance space when MetLife pre-announced some ugly fourth quarter numbers postponing their full earnings release. The thing is, MetLife's not the whole industry, and there are many superior companies that provide many different kinds of insurance products, including Chubb Limited, the giant insurer created by the merger of the old Chubb with Ace Limited back in 2016. Last night, Chubb reported, and it told a story of excellent underwriting with improving property and casualty rates that got better and better as the quarter progressed. Plus, despite California wildfire losses, management sounded bullish about the company's prospects in many of its business lines, including some excellent international businesses. Hence, the stock's strong gain today to an all-time high. So can this stock, which has been a strong performer since the Ace merger, one of the absolute best in the space, continue to run? Let's check in with Evan Greenberg. He's the chairman and CEO of Chubb Limited. Hear more about the quarter and where his company's headed. Mr. Greenberg, welcome to Mad Money. Good to see you, sir.
Jim, thanks for having me.
Thank you. Congratulations. This is not an easy quarter to be in the insurance business.
Yeah.
And yet, at the same time, you weathered it with a terrific balance sheet. Sorry about that pun. And also told a story about things getting better and better throughout the quarter. And that's even continuing in January, isn't it?
Yeah, it is. In terms of the, look, we're not going to overplay it, but the pricing environment has begun to improve. We're in a transition market where some areas, rates are beginning to respond to deficient pricing, and other areas are not yet because of competition. And we'll see how it plays in the future, but I'm optimistic.
Not everyone is as disciplined as you are. Some people are going to get big income tax gains from the federal government. How do you gain what they're going to do? Because some companies are willing to give away the store for business.
Yeah, but that's always true. We're in a market economy, and some will, I think at their long-term detriment, underprice their product. And if you want to, this is a risk business, and if you want to chase revenue, rather than chase a good risk-adjusted return, ultimately that's at your peril. So what do you have to do? You have to have superior product, superior service. You got to have great distribution and reach. And it's all about execution. Yeah. And you'll win in the marketplace that way. It's compelling.
Well, I also noticed the merger's been unbelievable. And people talk about cost takeout. Yeah. It's the cross sell. I mean, what you were good at what Ace was good at, Chubb may not have been that good at. What you were strong at, they may have been strong at. But together, right, the cross sell's amazing. And at this point, this merger really worked.
It really has worked. It's and as you say, of course, we exceeded our initial expectations by a mile on efficiencies and cost takeout, but it's really about 1 + 1 = 3. The complementary strengths of the two organizations in terms of product capability and service strengths and geographic reach and distribution excellence, where one was strong and the other one was stronger, the complementary strength of that, we are growing faster today than I believe the two companies left on their own would. And I think the compelling nature of that to the marketplace and what we can bring, that's in front of us.
Right, and people have to understand there have been a lot of mergers in the industry, and not a whole lot of them have worked out, and very few with discipline and growth. You mentioned twice now superior service. Now, let's talk about brand, because we don't usually think about it. Before you came out, I wanted to be sure that I've maintained my Chubb VIP status. And I did that because as I grew up, my father always said, one day you will be a Chubb customer if you continue to do well. And they will give you service and they will pay if you have. This is an amazing thing. You've got the brand. And how is that maintained? And why do people like me know it? I mean, how did this happen?
That is honest to God, that is such a fundamental ethos and North Star of this company. Right. We're not in the personal insurance space. You can find cheaper insurance.
Absolutely.
But absolutely. You will not find coverage that is as rich. And by the way, you will not find customers as delighted when they have had a loss with the service that Chubb provides. That is what we are all about. Now, and our customer retention is off the charts. And if you've had a claim with us, you're with us for life.
Very true. Now, I wanted to ask you about, are there areas where you don't want to write anymore? I mean, more Florida flooding, changing global warming. Are there things where you just say, listen, I don't want to take that risk?
No.
Really?
No. I mean, look, you can only take risk to the wherewithal and extent of your balance sheet and your ability to buy protection as you spread the risk to global balance sheet. But at the same time, as long as we can be paid properly and we can understand the risk and we can structure the risk, we will assume that risk. We can't get paid properly for all lines at all times, and that's when you see us give up market share and we will shrink. But when we can, that's our job. And by the way, as climate change becomes a greater reality and we have more volatility, and as society as it becomes more affluent, urbanizes more, then there's greater concentrations and exposure. That's the insurance industry's job if we want to remain relevant.
Well, these guys are the most relevant in the industry. I'm proud to actually be a customer. It's true. But, geez, what a stock. And it just keeps winning. It sounds like it's going to get even better. It's Evan Greenberg, Chairman, CEO of Chubb, CB. Best there is. Mad Money's back at the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.